Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and it's Tuesday, September 3rd. Pressure on the market all day. And finally, the market, the Dow managed to claw its way back up and closed up on the day. NASDAQ closed down. Russell 2000 had an update, believe it or not. So there's a mixed picture going on in the market. And what do I see? Well, the financials and the banks continue to shine. There's some fast money being made in some of these banks and these financial stocks, and looks like it's going to continue for a little bit longer anyway. Also, the automobile industry, anything to do with automobiles, whether you're renting them or buying tires for them, those groups act good, and they look like they're going to continue to act good. What doesn't act good is the high-tech stocks. The majority of them, some of them are okay, but most of them are under pressure. And the energy sector does not act good at all. Now, I kicked out BQI. Basically, it was a push. But I have two other energy stocks that one of them got away from me, and on any kind of rally back into that resistance area, I'm probably going to be looking to sell that also. The energy sector is just not right yet. Looked like it was going to make the turn, and it didn't. So at a later date, we'll have an opportunity there. But right now, a little too early in that group. What else did we do today? Well, I sold Borland for a respectable profit of about 18.5%. I just thought it looked like it was a little extended, and looked like it was running out of steam. So so I took the profit off the table. And what else did we do today? I have a new idea for you tomorrow. Another financial stock. It's a bank stock. So in just a moment, we'll take a look at the chart, and I'll show you how we're going to take this idea. I got to give you the idea, right? It's CORS, Chorus Bank Shares. And we'll take a look at the chart, and I'll show you how we're going to take this idea and turn it into some money. Now, don't go away. I will be right back. Okay, we're looking at a daily bar chart of CORS. I'm zoomed out pretty far because I want to give you a bigger picture. This is the resistance area that we're shooting for. It's just around $7 a share, 7 and change. And so let me zoom in, and I'll give you some stats here. This is, of course, it's a call on the long side. We'll be looking to buy this stock anywhere between $4.39 where it closed. Hopefully it pulls back a little for us for tomorrow, down as low as $4.12 is a possibility. My target is the 7 area, $7 a share, up in this range here. Sell stop, $2.75. Any close below that area right there is where I would put my sell stop loss order. Okay, so what do I see? Well, I'm calling this a continuation pattern. But let's point out a few other things along the way, how the whole thing started. Here we have a double bottom. Remember, I always said anytime you have a double bottom, it has to look like a goalpost, and you need to be able to kick a football through it. And this qualifies. So the whole thing starts off with a double bottom, rallies up, pulls back into support. This is a pretty good breakout right in here. Now it pulls back into support, and now she's turning the corner once again, and it's put in an ascending triangle. That's why I call this a continuation pattern, because the rally really, the bottom is really here, and all this is just part of the uptrend, and it's going to continue. Here's the triangle. You can see today we actually broke out today for the first time. Hopefully it pulls back into the triangle tomorrow and give us a chance to get some cheap stock. Okay, let me recap this. This is CORS. This is a call on the long side, and after all said and done, we can probably make ourselves, I don't know, $250, $270. Remember, it's only a $4 stock. Okay, let's take a look at First Marblehead. I like this name. It's catchy. Bought this morning at 435. I thought it was going to come in. I waited a little bit longer than I should have, and I finally had to reach to get it, and they closed at 451, and it's looking good. This is our ascending triangle. This is also a continuation pattern. So we'll put that in our portfolio, and hopefully within a week or two we'll be ringing the register. Okay, let's take a look at the major indexes. This is the Dow. These are our key areas we're looking to break. A close above that would start a new leg on the upside, and I believe a close below that level there would start a leg on the downside. And we've been going back and forth for 15 days, back and forth through here. Now the Dow managed to close up on the day, and it closed on the high end of the day. Technically, it's a high close. Also, this pattern, this look is still intact. So I can draw a ascending triangle look, but it doesn't count until we break out. Because if it breaks down below this level here, then the market is got a bad look to it. But as of right now, we can still say it's an ascending triangle, but we will see, because it's having such a difficult time breaking out. Transportation average, similar look. These are our key areas. A break below this says they're going lower. A close above this level here says they're going higher. Russell 2000, a close above this level, we should get a new leg going on the upside, and a close below that level says we're probably going to retest this support area down here. What is interesting here is I pointed out the other day that this was a resistance area coming back up, and the day it got through, I said coming back down, this should act as a support area. Now, because there's so many unanswered questions in the marketplace, all I'm going to say is that so far it has held the support area. So it's interesting. But our key areas are still here and here. SPY, Standard & Poor's 500, very much like the Dow. It's back and forth, back and forth, back and forth, waiting. We're waiting for the breakout in either direction. QQQs, worst acting index in the group, and these are our key areas. Close below this level here says we're probably going to come back down into this area, and a close above that all high says we're going to attack the all high here. First problem, this is why the high tech group just is not act good. The Dow acts better than the high tech group because it's filled with those financials and the autos and the manufacturing stocks, which all act good, and some of the retailers act well too. Okay, so this is our first resistance area that we've got to get through, and then we've got to get through this area. If we can get through this first one, then we've got a chance, but we're a long way from there. So what we need for this is to dig in and not deteriorate much more from where it is, because if it closes below this level here, then all the bullish bets are off. Okay, so there you have it. That's my view of the market. Until tomorrow, TK.